Hi everyone, thanks for tuning in. Today we're going to take a look at what's been going on with the club and the economy recently. So our CFA team has actually ended up winning the local competition through the CFA Society of Iowa, and they went on to the Midwest level and actually won that as well. So they competed at the America level, facing off against all the top teams in North and South America. So we're very proud of them. And from that research, we decided to make an investment in the club into John Deere, which was the company that they researched and presented on. And since our purchase back in February, this has paid off very well so far. So right now the club is looking to sell one of our holdings. So we've been sorting through our portfolio and attempting to find our worst holdings. So with that, I will hand it over to Josh for the portfolio manager report.
Hello. So the stock market did go up as a whole in March. Right now our portfolio has about $5,800 in cash, and our portfolio value is a little over $1.2 million. Over the month, our portfolio went up about 3.43%, or $42,000. Over that time, we trailed the S&P by just a little bit, about 0.35. So here's a few of our biggest movers of the month. So the biggest negative mover was Tesla. Tesla has slid recently due to lower sales and sales projections due to increasing competition. They did recently, earlier this month, lay out plans to increase pricing for their EVs. Nike is down as they reported earnings on March 22nd with general disappointment in growth of sales and earnings overall. We bought Deere on the 23rd of February. Ag and construction machinery makers performed very well in March, with Deere following that general upward trend. We're excited for Deere's long-term potential to begin capitalizing on their industry-leading advanced data collection. And then Crocs, which we bought in October 2023, continues to perform very well after a strong earnings result in its February earnings call. It's up over 60% since purchase. So I also did this. One thing that investors want to do is hold securities that provide the largest returns for the least amount of risk. And in regards to that, decided to kind of go through our stocks and rank them based on risks, based on return for the month over the standard deviation of returns over the month. And it turned out that the first one was John Deere, second Enterprise, and third Raytheon. It's kind of interesting because they actually ranked second, sixth, and 12th in terms of returns, but their returns were overall less volatile than the returns from, say, Crocs. And then our portfolio weighting right now, according to, in reference to the S&P 500, right now we're overweight in real estate and consumer discretionaries, and after doing a shifting of a couple stocks around to reflect their true sector, we're down in infotech. We're looking to remedy some of this in future meetings.
Yeah, thank you, Josh. Just kind of going to move into what's been going on in the economy. So for the past month, the markets remained relatively steady, nothing crazy, no huge leaps, no huge lows. The market did hit its all-time high in the past month, which just is interesting to see based on a lot of the uncertainty that's been going on within the market. A lot of Americans remain uncertain in it, and yet the S&P continues to hit all-time high after all-time high. There was a Fed meeting this month, which was a really big deal for our club. I mean, that's the thing that's really going to be determining necessarily where the market goes from here on out. They held rates constant again, and the biggest thing, something I've stressed to the club a lot, is not necessarily what happens with the rates. Obviously, that's very important, but look at the way that the Fed talks about the economy. Look at the way Powell talks about it in his press conferences, the optimism or pessimism they go about with it. And Powell's been saying and remained optimistic that the economy's made significant strides towards the Fed's overall long-term goals. Those long-term goals being to hit 4.6% for the federal funds rate by the end of the year, likely about 3 more rate cuts, which just in terms of our club looking at it, that will likely really change the stock market going forward, especially with the election in the fall. If they cut rates too quickly and inflation rises, that would definitely really hurt the market. So the Fed's just in a wait and see mode. I know we've talked about that for a while in the club, but it'll be really interesting to see before the end of the school year, and that's something I want the students to continue watching, along with the jobs report that just happened very recently. The Fed's watching this very heavily, and jobs have been generally driving the market, driving the economy, driving consumer spending. With that all being said, it's all going to impact the market on a broad basis. Making sure that everybody in the club knows what is happening within the market is important when evaluating the individual stocks that we pick on a regular basis.
Thank you, Sam, and thank you guys for tuning in, and thank you for your continual support. You really help make this club function and give us students the opportunities that we need in this club, so thank you.